This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, having now looked at the loss reliefs available for normal continuing business, i.e. once you've worked out the tax year of loss based on your basis of assessment, once you've established the tax year of loss, what can you do with it? You can set it off against the total income of the current tax year and or the preceding tax year. And if you've made either of those claims, then for the tax year in which the claim has been made, if you've still got loss left over, then you can extend that claim, as we saw, against our chargeable gains. Anything left over after all of that was simply carried forward against the next available future trading profits of the same trade. But what we have now to look at, as we considered and mentioned at the end of the previous session, is to look at the specialist circumstances of opening years and closing years. The opening years of a new unincorporated trade and the closing years, obviously, of a trade that then ceases. Should losses arise within those circumstances, there are additional extra loss reliefs available. We look firstly, therefore, at the losses in opening years. Now, to be able to deal successfully with the opening year's loss relief, as it is known, and indeed the normal loss reliefs, as we are aware, we have to remind ourselves of how it is we establish from the first tax year onwards until such time as we get onto our normal current year basis, how we establish the basis of assessment and the basis period, and therefore determine what hitherto has been a tax-adjusted trading profit, but from now on may be a tax-adjusted trading loss. Now, to do this, you need to know your bases of assessment in our opening years. Now, if we haven't looked at those in the last few days, it might be an advisable, worthwhile bit of time for you to spend just going back and looking back in the previous chapter, chapter 6, at what those bases of assessment were, or at least having the note available there that tells you what those rules are. Remember, the basic principles are simple. In the first tax year in which you trade, based on your date of commencement, the assessment basis is always actual. What profit, or indeed now loss, was made from the date that you started trading through to the following 5th of April. We then attempt to get on to current year basis, our CYB, as soon as possible, but we can only use it from the tax year in which there is a full accounting year ended within that tax year. Now, that may be as early as the second tax year, but it may be the third or even the fourth tax year before such a valid CYB is available to you. If that is the case, then in the second and maybe in the third years, we have to determine which 12 months of profit will be assessed. So you therefore need to go back and look at, if you haven't already revised or already know, what those rules are. Because now into that problem we have the added problem of dealing with our losses. So what are we told here? In the first tax year of trade, the assessable profit or loss is, as we've just said, measured from the day we commence trading to the following 5th of April. It is the actual basis of assessment. Now, unless the trader prepares accounts to 5th of April, it will require the profit or loss to be apportioned. That opening period, remember, though if you're lucky will be 12 months, is more likely in real life to be either short or a long period, less than or more than 12 months. So always watch out on the length of that opening period. If you have to apportion it between, say, the first and second tax years, or indeed even the second period, watch out and look specifically at the first period. To be fair, what is the length of that period? That first period may not be 12. Often when we're doing time apportionments for tax years, we assume that the denominator is always going to be 12. Well, it isn't always so. Look at the length of that opening period. Now, what you're also aware of in opening years is that unless you've chosen 31st of March as your accounting date, then what we end up with is an overlap period and an overlap profit. Now, this doesn't happen when dealing with losses. A loss may only be used once. If therefore in opening years of assessment, as a result of overlap periods arising, a loss has been taken into account in computing the assessment of one tax year, then that amount is treated as nil when calculating the next assessment. There is no concept of overlap loss. If a loss falls into 2 tax years, then it is used in the first of those 2 tax years. You cannot have it for use again in the second year. So a simple principle to adopt. One, of course, that we need now to practice in the context of our little example 4, where we've been asked to calculate Matthew's trading profit assessments and the losses available for relief in respect of all the relevant tax years. Remember that if the net outcome for your basis period for a tax year is a loss, then the assessment is nil. Remember, we don't have negative assessments, we have nil assessments for tax years, and then we decide, based on how much loss is available, what options exist, which of those options we will choose. So, Matthew starts to trade on the 1st of August 15. First thing to do, therefore, on your question is to note what, therefore, is my first tax year. 1st of August 15, that falls in the 15-16 tax year. So you now know what is your first tax year. Trading results adjusted for tax as follows. Well, we start here with a short period, 10 months to 31st of May, in which we make a loss. Our first year end is the 31st of May 17. Therefore, the first time a current year basis of assessment may apply is using this as the basis period. Then the year ended 31st of May 17 ends in which tax year? Answer, 17-18. So the first tax year, 15-16, is actual. 17-18 is the first time we can use CYB. That leaves a gap for 16-17, that of course being now the second tax year, our usual problem, and you have to sort out what that basis of assessment will be. Now hopefully you can see from the rules that you should know how to deal with that. First tax year, 15-16, is going to be an actual basis of assessment. Third year, 17-18, will be CYB, and will assess the entire profit there of £48,000. That leaves 16-17 as the second tax year. Question, do we have any accounting period ended in the second tax year? Well, there's your first accounting period, the 10 months to May 16. Yep, 31st of May 16 ends in the 16-17 tax year. So we do have an accounting period ended, but of course it is a short period. So when you have a short period ended in that second tax year, which 12 months do we take as our basis period? Answer, the first 12 months. So what we now need to do, therefore, is to establish what these assessments will be and what the loss reliefs will also be. So set it up as we normally do. So we want to know the tax year that we're dealing with, we want to know the basis of assessment, and we want to know the basis period. So we are dealing here with our 2015-16 tax year as the first year. That is an actual basis of assessment, and that therefore means from the date you started trading, 1st of August 15, through to the following 5th of April, the 5th of April 16 there. So what would go into that period? So how many months is it out of this opening period that goes through to the 31st of May 16? We only want to go to the 5th of April. Well, that opening period is 10 months, but from the 1st of August through to 5th of April, so we've got August, September, October, November, December, and then January, February, March. Hopefully we would agree that that period amounts to 8 months out of what is an opening period of 10 months in which we sustained a loss of £20,000. Now the result of that calculation tells you two things. Firstly, the loss that is available, and also then the assessment that will arise for the tax year. The loss, 8/10 of 20, that's a loss of £16,000. The assessment, it's a loss, therefore nil. Job done. First tax year, actual, start date to following 5th of April. How many months is it out of what length of opening period? What is the loss? That is the figure of loss available for relief in relation to that tax year. And whatever the figure of loss, the assessment is nil. On then to always the trickiest, and this will be no exception, to the second tax year. Whereas we've said, do we have an accounting period ended? Yes, we do. How long is it? It's 10 months. That is a short period. Therefore, the first 12 months is used as our basis of assessment. That means from the 1st of August 15 through to a date 12 months later, that will be the 31st of July there of 16. So what goes into that period? Well, you've got the opening period through to the 31st of May 16. What was that? Well, as we've just seen, period 10 months to May 16, pardon me, that's a loss of £20,000. So that therefore equaled a loss of 20,000. Now, do you think we will be allowed all of that loss to be used in this tax year, given that we've already used 8 months of that loss there in the earlier the 15-16 tax year? Remember, no concept of an overlap loss, so what do? We now must remove from 16-17's loss of 20 less any amount of that loss that's already been used, i.e. used in the 15-16 tax year. How much was that? Well, clearly, as we can see, it's 16,000, and that quite sensibly means that just the remaining loss of 4,000 would be allocated here to this year. But be careful, because in computing now the assessment for this tax year, we need the first 12 months. So as well as that amount of loss for the first 10 months, we also need to include 2 months of the 12 months worth of profit that then followed. Well, how much was that? That there was a profit of £48,000. So into our calculation now, 2/12 of £48,000. What will that equal? Well, that's going to be 8,000. So what we've got is more profit than loss. Therefore, there is no loss available for relief, but the assessment now, rather than being 8,000, is reduced by the 4,000, so the assessment is the net £4,000. Here there is no separate loss relief. We have used that £4,000 loss in deriving that net assessment of 4,000. If that opening 10-month period had been break-even, neither profit nor loss, then that 2 months' worth of profit, £8,000, would now have been assessed in this year. Well, we're not assessing 8,000, we're assessing £4,000. So that loss of 4,000 there, the remaining 4 of the opening period's loss of 20, that loss is said to be used in aggregation, in deriving what is then the net assessment for the year. So here we've already used the £4,000 loss. It means that in terms of our strict loss reliefs, there is but one loss to be used. That's £16,000. Now we'll talk about the ways by which it could be used in a moment's time, but just to complete your assessments, as we know in these opening years, we have already agreed that from 1718 we can use CYB, where we'll have an accounting year ended, and that this time will be the 31st of May 17. There, that full first year end, as you see there, whereas we know we have a profit of £48,000. Profit 48,000. However, what we've also got to consider is overlaps. Now, there was no overlap loss. There's no concept of overlap loss. You don't get to use it twice. So of the 20,000 loss made, the first 16,000 that fell in the first tax year, 15-16, is allocated to it. The remaining balance of 4,000 is set against the income in the second tax year's basis period of 8, netting out to a reduced £4,000 net profit assessment. But what we now have is all of that £48,000 being assessed in 1718, having already used within the assessment for 1617 £8,000. Therefore, we have got an overlap profit for future purposes. We know that will be used in determining the assessment in the final tax year of trading, an overlap profit of 8,000. The 8,000 was used in deriving the assessment for the second tax year, and it's a part of the 48,000 that is assessed in the third year. Classic overlap profit of 8. Remember, no overlap losses. The 20,000 is used once. Here, 16,000 in the first year and 4,000 netting against what would have been a higher profit in the second tax year. Okay, let's just have a look at how that manifests itself in terms of your answer format as we've just been writing it out. What have we got? There's 15-16 actual, 1st of August to 5th of April, 8/10 of 20, nil assessment, loss 16,000. First 12 months, 16-17, the first loss-making period, that was 10 months, 20,000. Take out what we've used, that leaves 4,000. But the other 2 months of the the basis period is a profit period in which we have a profit of 8. Therefore, net against the loss, thus using the loss, creating a lower figure of assessment of 4,000. That then leaves CYB assessment of 48,000. When assessing the amount assessable for, calculating rather the amount assessable of 1617, as we said, the loss taken into account in 1516 must be deducted. The loss of 4,000 allocated to 1617, as we said, are using aggregation against the profit of 8,000. There it is, being used in aggregation, creating that net assessment of 4. No further relief is available for that loss. The taxpayer would then need to choose his preferred use of the loss of £16,000 in respect of 15. A loss may only be relieved once. There's no concept of overlap loss. What we've also identified, of course, here is that we've got some overlap profits. That we've got £8,000 of the year ended May 17 profit used in establishing the assessment for 1617, and all of the 48,000 assessed in 1718 there. So we've got overlap profits of £8,000. Okay, so using our bases of assessment in opening years and acknowledging how a loss is allocated if it falls into 2 tax years, into the first of those 2 tax years, we can establish over the opening years what is, if it's a loss-making period, a nil assessment, and also then what the actual amount of loss available for use would be. Now, in terms of that £16,000, what loss relief would be available for use? Well, what do we already know? 1516 is the tax year of loss, so the 16,000 could be set against the total income of 1516 and or the preceding tax year, that would be 1415. Otherwise, it could be carried forward against future trading profits of the same trade there. Other than that, if you have made either the current or preceding year claim, and there was still loss left over, and you had capital gains, you could make, if you wanted, the extension claim against those gains. But what we're then going to see, as we made mention of in point of fact in our introduction to loss reliefs available to the unincorporated trader, is that there's a specialist opening year's relief. So what I'd like you to do now is just have another review through the answer that we've put together for example 4. So you can pause at this particular point while you do that, and then we will continue the session to go on and look at the specialist opening year's relief available within the opening years of assessment. Well, now we know how to calculate the amount of loss that has arisen in relation to any tax year during those opening years, and we know that the ordinary loss reliefs are available, as we've seen hitherto. What we've now got to look at is this specialist opening year's loss relief. Now, it's specialist, only available in opening years, because it's only available for losses incurred in the first 4 tax years in which we have traded. Outside of that, it's just your normal provisions. Relief is available again against total income. So just like with the current and preceding year claim, it's against total income. Now, what makes this claim different to those claims? The fact is here that if you sustain this loss in any of the first 4 tax years of assessment, that now we can carry back that loss, not just 1 year, but 3 tax years. So relief is available against the total income of the 3 tax years preceding the tax year of loss. Now what that means is that if, for example, you were to make a loss in your very first tax year, such as what happened in example 4, with this specialist loss relief, you can go back against the total income of the 3 tax years preceding that tax year. So that would take you back to a time when you weren't even trading. So there is no need, therefore, for the trade to have been carried on in those preceding tax years. So this is a more generous loss relief. It's logical, as we discussed in our introduction to the loss reliefs in our first session on Chapter 7. Because if businesses make losses in the first years, if we are therefore in that situation, our cash flow situation may be very bad from a personal, let alone a business perspective, and the individual might be forced to close that business. Whereas, if the cash flow had been a little bit better, maybe that business could have carried on, come out of loss making into profit making, and once it was profit making, a whole stream of tax revenues may flow therefrom. So to give the trader a better opportunity of doing that and acknowledging they're going to give relief for the loss at some point anyway, they are allowing taxpayers to use that loss sooner rather than later. Because if we carry back, as we will, against the preceding 3 tax years, then any income tax for those preceding 3 tax years will already have been paid. That means that this claim will create an immediate tax repayment. Cash tax paid in earlier years now coming back to you. Hopefully a lifeline by which, therefore, the business will be allowed to continue to trade. So this relief does operate against all 3 preceding tax years. Now this is one claim against all 3 years, whereas in the current and preceding year claims were 2 separate claims. You could make one, you could make both, you could make both in either order. They were 2 separate claims. This is one claim that extends against all 3 years, and it applies, therefore, on a first in, first out basis. We go back to the earliest year first. So, for example, if you started trading during our 16-17 tax year, that was your first tax year, then we could go all the way back to 3 years to 13-14 and go against the total income of 13-14. If the loss was bigger than the total income of 13-14, we'd come forward against the total income of 14-15. And not that it's likely, but if the loss was bigger again than the total income in 14-15, you'd then come through to 15-16. So there are your preceding 3 tax years, and we go on a first in, first out basis. 13-14, followed by 14-15 if necessary, followed then, if necessary, by 15-16. Now we said going against total income, so just the same as with your current and preceding year relief, partial claims are not available. When you go against total income, it means you will take out all of the total income to the extent that you have loss available. And that means, same problem as before, your personal allowance, now not just for 1, but maybe up to 3 tax years, may effectively be lost. As we know from the example 4 that we did and the calculations performed there, the loss available for relief is computed in the same way as profits. Which tax year, what basis of assessment, what basis period, calculate using the loss, and if necessary any profits that fall in, what loss or net loss arises. That gives rise to a nil assessment, and then you have to consider which of the available loss reliefs you would wish to choose. As we have said all along, you've still got the normal ongoing reliefs, total income of current and or the preceding tax year, with then a possible extension claim against gains. Carry forward against future trading profit, or now your specialist opening year's loss relief. And to help us here with this, we've now got our example 5 to review through. Now what I'd like you to do here is to review through that information. What they're asking us to do is to calculate the taxable income for all years after claiming opening year's loss relief. Assume, as there are so many years to look at, that the personal allowance for 16-17 applies throughout, so a standard £11,000. But to begin with, like in example 4, before we can start to deal with the application of the loss reliefs, you've got to calculate what losses and for which tax years they have arisen. So, Fiona started trading on 1st of July 15, first period. Fortunate here, look, we've been nice to you. The first accounting period is a year. That means that in working your basis of assessment in opening years becomes a whole lot easier if you start with a 12-month period. I would like you, therefore, now to work those assessments and the losses available for relief based on this little bit of information here, as far as that information provided below for each relevant tax year. Follow the principles that we applied in example 4, now in example 5. Get those figures and then start the lecture again, resume the lecture, and we'll see how it is that we will use those losses. But get those losses calculated and any assessments calculated first, please. Okay, let's see how we fared, therefore, in establishing what those assessments and losses available for relief are in the opening years. As ever, first thing, of course, that we do, look at the start date, and that fixes the first tax year. That is 15-16. We immediately start with a loss-making period, as we said. Thankfully, the year ended 30th of June 16. Now, I say thankfully, because it means that when you come to the second tax year, 16-17, do we have an accounting period ended in the 16-17 year? Yes, we do. And not only is it a period to the 30th of June 16, it's a year ended 30th of June 16. So we can use current year basis from that year onwards. So CYB in 16-17, year ended 30th of June 17, CYB assessment in 17-18. As it was the first period in which we made a loss, then the specialist opening year's loss relief is going to be available for a loss sustained at least, if not more than one tax year, but at least for 15-16. Back 3 years from 15-16 would take us, therefore, all the way back to 2012-13. So we've got a huge range of tax years here to deal with in relation to calculating the taxable income for all years after claiming opening year's relief. The opening year's relief, as we know, will go back to 1213, and our assessments here will take us as far as the 1718 tax year. So there's an awful lot of columns that we're going to need here. Probably more, to be fair, than we'd ever have to deal with in a real examination question. So I need you, therefore, having worked out, well, once we've agreed, of course, what these losses and assessments are, to then set up a working with all those tax years as columns on them. Let's have a look, though, at what our calculations using those bases of assessment should be. A little peep at the answer. Oop, not that bit, but that bit. As we've just agreed, 1516 is the first tax year, actual basis of assessment, start date 1st of July through to following 5th of April 16. That is 9 months out of what is an opening 12-month period in which we made a loss of 12,000. So that is a loss of 9,000 and thus an assessment of nil. So the first 9,000 of the £12,000 loss is available for use in relation to the 1516 tax year. On to the second tax year, 1617, where, as we've agreed, we can and will use CYB. That's the year ended June 16, and that was a loss of £12,000. Well, you can't, of course, have all of that £12,000 loss all over again, having already used £9,000 back in 1516. So take out the loss we've already used, which gives us with £3,000 of loss as being available for the tax year 1617. So there's your £12,000 of loss, £9,000 for use for 1516, £3,000 for use in relation to 1617 tax year. Obviously both losses, so again a nil assessment. On to 1718, and we get, albeit a very small amount, of trading income assessed. The year ended June 17 are £2,500. There's our losses available for relief, then we've got to use them. In order, the 1516 loss first, what do we say? Back 3 years under opening year's relief would take us all the way back to the 2012-13 tax year. Which means, as we've said, it's an awful lot of copying down here that we've got to do. So use your columnar format. The earliest year in which relief is available is 1213, and we've come all the way through to our CYB assessments in 1718 there. It's a question of copying down from the question. So back to the question, what did we have? We've worked our assessments, and there we've got figures of remuneration from employment, which ceased on the 30th of September 14, so as far as the 14-15 tax year, going all the way back to 12-13. Fiona also has property income of £4,500 per annum. So, back to our answer. Pick up the figures of employment income, straight copy down from the question, 12-13 through to 14-15. We already know that our trading profit assessments are nil in the first 2 tax years, 2,500 in 1718. We know that our other income is property income, and that's £4,500 for each and every tax year. We've been told to apply opening year's relief, so that relief goes against total income. So we need to know what total income figures we have, and now we can add down and derive those figures. Our first loss was £9,000 in relation to the 1516 tax year. Where does it go? Back 3 years, all the way back to 1213. Do we have enough income there, 17,300, to absorb that 9,000? Of course we do, bringing that net income down to £8,300. All of that is covered by the personal allowance. It does sadly, of course, mean here that some of that loss has not gained a beneficial use because it has reduced income that would have been covered by the personal allowance anyway. But that's the price that you pay for making that claim. Remember, any and all claims against total income you cannot make partial claims so as to get full use out of your personal allowance. Moving on from that first loss to the second loss of 16/17, that was £3,000, we've got £15,550 worth of total income, £3,000 of loss, more than sufficient, therefore, to be absorbed by that total income, and still leave you with a net income of just over £12,500. At least now sufficient to cover your personal allowance, and still leave you at least with a little bit of taxable income there. 14/15, you packed in employment halfway through that year, so you got a reduced employment income. When added to your property income there, gives you only 10,368, more than covered by the personal allowance, so again a nil assessment. In 15/16 and in 16/17, nil assessments. The property income is only 4,500, so the total and the net income is 4,500, covered by your personal allowance, so nil assessments there. On to then 17/18, and we have got the £2,500 of trading profit now assessed, but even when adding that to our annual property income of 4,500, it's only 7,000, again covered by the personal allowance. We have got nil taxable income there, and therefore no tax to pay. Okay, now it's unlikely that in any exercise you'd have to cover as many tax years as we have got there. Probably 4 tax years. You will have a tax year of loss, and you go back 3 years. Obviously, any individual part of this could be tested in terms of a Section A objective testing question, asking you to identify possibly where the loss and how much loss would be used, or how much net income or taxable income remained after you had applied the loss for a particular tax year. Again, imperative as always, of course, on those objective testing questions, to make absolutely certain that you've read the requirement very well and understood what is exactly the question that they are posing you. You know that there are 3 other answers to the correct one which have been set there for setting traps, figures that you could calculate if basically you've not read or understood properly that requirement. So be very careful. Okay, so there we've got our new opening year's relief, allowing the taxpayer a more immediate relief of the loss and the potential for what would be a tax repayment of tax paid in any or indeed all of the preceding 3 tax years there. That does not preclude the availability of the other reliefs which are there to be claimed if you prefer. But this, another string to your bow, as we say, another option available to you. It needs to be reviewed. In the same way as there is this specialist relief that deals with opening years, there is a specialist relief that deals with closing years, that known as terminal loss relief. And that we'll look at in what will be a hopefully shorter but certainly final session to this particular chapter next time. Before we do that, I would recommend, they are a lot easier, but look at and remind yourself of the bases of assessment in the final tax years and the technique that we adopted to give us those assessments in those final tax years of trading. I look forward to talking to you again at that point in time.